Well, Mr. Ukuku, please hold on to your thoughts. Mr. Nwobu, he talked about enterprise development projects, but how can the capital market actually, support development finance for sector-specific projects?
Yeah, sorry. Before I answer that, let me make a remark.
Okay.
I'm looking at the psychology of the new CBN governor. I am seeing so much zeal, which is good, but that zeal should not actually cross the borderline, so that he does not put his hands in so many pies, which can cause what we call role overload. And when you have role overload, your level of achievement certainly will be drastically affected. Now, he was talking about development in finance. Like the gentleman rightly said, there are development finance institutions in this country whose primary job it is to play that role. Now, there's nothing wrong with CBN coming, but it has to be strictly from the periphery and adversarial perspective. Otherwise, if you immerse yourself in that, immerse yourself in oil, immerse yourself in health, immerse yourself in everything, you are surely going to lose focus of the primary function of the central bank. Now, your question
about the capital market actually supporting what you've just said.
That's right. The capital market has a role to play. In an article I wrote sometime, I said that the stock exchange should not be only a place where securities are exchanged. It should also be a place whereby information and knowledge should be exchanged. And I went ahead to recommend that the stock exchange should start keeping in touch with selected SMEs to align with them and then inculcate culture of excellence, corporate governance, account keeping, so that some of the problems bedeviling the SMEs, which include information opacity and lack of good corporate governance, will be eliminated. And then they interact with them over time and be able to groom them, to bring them to list in the stock market. And I'm glad to say, whether coincidentally or otherwise, in less than a month's time, I found out that they came up with that policy. So they have a role to play there, quite okay. And the problem of SMEs in this country has been, is a long story, bedeviled by corruption, as a matter of fact, because the government has done so much in the past to boost SMEs. And after all and everything, nothing really changes. Yet, the power of growth resides in the SMEs. So what I'm suggesting is that, good. The new governor has talked about his agenda there, which I don't see anything too different from what is on the ground right now, because the private sector he's talking about, are the banks. I've studied what Zenith Bank is doing with SMEs, GT Bank, Diamond Bank is doing great with SMEs, so that's just what he mentioned here. Now, what I'm trying to say is that, I need to see more creativity. We need to see more creativity concerning these SMEs. We may have to go study companies that are very progressive with their SMEs. Countries like Japan, South Korea, USA, China, and know what the deal is with them. Because ours have been a story of fiascos all the while. Even with the intervention of the Bankers Committee, the last program set for SMEs, was also a failure. So it beats me.
So now, in terms of looking at this topic that we're talking about right now, this driving investment growth through monetary policy, how should he begin to tackle it? Because even though it's going to be gradual, and we're not going to start seeing that gradual reduction until the end, until after the general elections.
Yes.
What should we be expecting to see, at least now in the short to medium term, that the market is actually waiting and anxiously, expecting something to happen?
Yeah, the market should wait, because the prevailing circumstances right now does not support anything to the contrary. You know what I'm saying? Now, what I actually expect him to do is to be in layers more with the capital markets regulators and operators, because looking at his paper, it's like the capital market is an orphan in this presentation. It's just a few lines. And then when he talked about the financial system, you find out that it's all about the money market. The financial system comprises of the capital market and the money market, but here we are just talking about money market. So he has to liaise more with the regulatory authorities in the capital market, because when in the aftermath of the stock market fiasco of 2008, I did a diagnostics which I sent to the governor, previous governor, the DG of SEC, the current CEO of Stock Exchange, on what led local factors that contributed to that grievous downturn. And I found out that there was a disconnect between CBN, Stock Exchange, and SEC in the area of margin loan policy, which was what triggered the market locally here. And I'm glad to say that after Sanusi took over, he's forged a good nexus, with the regulatory authorities. Mr. Emefiele should continue with that and explore options. And we should also know that, financing is not also limited to the money market. In fact, it's even better to finance through the capital market. It's more cost-effective. It gives you less blood pressure. You're more relaxed over time. Yes.
Some people will argue that part with you, but we'll come back and actually have that argument because it seems to be a very, everybody understands that you have to, to get easy interest-free, capital, you should go to the capital market. But the fact that it doesn't give you blood pressure, not a lot of people will agree with that. Let's quickly take a break.
That's right.
Mr. Ukuku will also take a break with at this time so that we'll come back and continue this conversation. You're watching Business Morning on Channels Television, and we're broadcasting live from Lagos. And we're taking a look at driving investment growth through monetary policy. And I've been having a conversation with two gentlemen, one in Abuja. He's the country rep, International Institute for Investment Promotion, Ogbonna Ukuku. And here in Lagos, a financial market analyst and stockbroker, Mr. Arinze Nwobu, has also been having this conversation with me in the last couple of minutes, but we'll be back in just a moment. Welcome back. You're watching Business Morning on Channels Television, and we're broadcasting live from Lagos, Nigeria. On the program in the last couple of minutes, we've been looking at driving investment growth through monetary policy. And I've been having a conversation with two gentlemen, one here in Lagos with me. He's a financial market analyst and a chartered stockbroker, Mr. Arinze Nwobu. And from our Abuja studio, I'm being joined by Ogbonna Ukuku. He's a country rep, International Institute for Investment Promotion. Thank you both for staying with me on the program. But just before I come to you, Mr. Ukuku, Mr. Nwobu, before we went on break, we talked about accessing easy finance from the capital market. And you say it's stress-free, it doesn't give you blood pressure and the rest of it. But then a lot of people will argue with you because in spite of what, the current administration at the exchange is doing to show up investors' confidence, which we have seen return, in the last couple of months. At the moment, the all-share index is up above 41,000 basis points, and it's looking strong. But in terms of driving this investment that we're talking about, we're expecting to see more coming in, especially post-World Economic Forum on Africa. A lot of investors are going to be coming in, and most attention is going to be focusing on the capital market. But are the policies, strong enough to actually encourage them to come to the capital market?
Yeah, I mean foreign portfolio investors?
Yes.
That's right. For some time, foreign portfolio investors have been playing quite heavy in the Nigerian stock market for the reasons, for the fact that they understand the market better than local investors. And they are given to taking more risk, than local investors who were terrified after the stock market downturn. Now, what we have to look at is, what are the things that are encouraging these foreign investors? You find out that the return on investment on the Nigerian stock market is quite high compared to the other African capital markets and other capital markets, stock markets, in the stock markets. That is one factor. And then there is a favorable exchange rate. It's been stable over time. And let me tell you, exchange rate is the most watched and most analyzed by all investors. be you money market, be you capital market investor. It is the most watched and most analyzed. And foreign portfolio investors tend to gravitate where exchange rate is favorable and stable. Yes, they tend to gravitate towards that. And it's been stable for some time in the Nigerian market. You know, because exchange rate determines the rate of return of your portfolio. You know? So these are basically what has been attracting foreign portfolio investors. But we have to be careful about that because there is a downside of FPI, which is it comes with hot money. And hot money can be quite destructive to markets, especially emerging markets. You know, they can destabilize stock markets because, you know, they come in trickles and then build up. But then when they hit any threshold, or if they see other economies, you know, that are more profitable, they tend to move out en masse. And that has the capacity of collapsing or triggering the collapse in the capital market. So at any point in time, the regulatory authorities are advised, you know, to be, you know, on the lookout. Volume of FPI. You know, at this stage, I think we desire more of FDI, which is the opposite of FPI, cool money.